Good morning, good evening, good afternoon, good 2 o'clock in the morning, wherever you are in the world. Our guests are from all over the world, so I'm not quite sure how to greet, but here we are at the Hong Kong Blockchain Conference with a fantastic panel on compliance, a topic which is always hot in this space, but seems to be gathering more steam recently with different government moves towards regulation, with decentralized finance, with distributed autonomous organizations, raising a question of where is an entity located and which regulations does it need to comply with. There's a lot to cover, but I think before we start diving into the topic, we're going to do a round of introductions just so we can identify all of our esteemed guests and panelists. So like every other conference these days, this is virtual. So I'm going to go clockwise based on my Zoom, which no one else can see, apparently. But I will start with Benjamin, name, rank, serial number.
Hi, so I'm Benjamin and I'm business manager at Scorechain. So we have been established in Luxembourg and France since 2015, so 5 years ago. So the regulation in Europe and France and Luxembourg impacts us also. So to let you know what is Scorechain quickly, we are providing a very competitive crypto monitoring solution for crypto players and traditional financial institutions to become compliant and satisfy AML and CTF requirements worldwide. So
today, and you're physically in Luxembourg right now?
I'm in Paris. I'm locked
in
down.
Paris.
Yeah.
I always want to know everyone's time zone so I know how dedicated they are. Though I think Brian's the most dedicated, but we'll see in a second. So you're in Paris right now. Fantastic. Got it. All right. Thank you, Benjamin. So Michael Sung, please.
Hi, my name is Michael Sung. I am the co-director of the Fundan FinTech Research Center. I do a lot of connecting internationally to the China ecosystem.
And you're located, did you say?
What was that? I'm located in Shanghai, China.
Joshua Klayman, my esteemed colleague, please. Or Josh Klayman.
I'm Josh. Notwithstanding my background of London and my mug that says Luxembourg, I'm in New York. I'm senior counsel, U.S. head of FinTech and head of blockchain and digital assets at Linklaters, which is a global law firm. And I also co-head our global tech sector, and I chair the legal working group of the Wall Street Blockchain Alliance.
You're busy. Got your hands full. Okay. Brian Tang, or maybe I should call you Professor Brian Tang. I'm not, doctor?
No, none of that. So I was, my background is in law as well. Former lawyer, New York and Sullivan Cromwell, then in-house at Credit Suisse. And then went into the FinTech, the RegTech and the LawTech space. So a couple of roles. I'm the co-chair of the RegTech Committee of the FinTech Association. We just had our World RegTech Summit last week as part of the FinTech Week. And I'm also, as you were alluding to, have a role at Hong Kong U leading LITE Lab. So I'm the founding executive director there. LITE stands for Law, Innovation, Technology, Entrepreneurship. So the fun thing to me is that besides the practice of law, as we all know, we're talking about policy now, right? Really, laws haven't really been made. So lots of fun and cool stuff.
Actually, that's almost a conversation topic right there. You're making a distinction between policy and law, and they're not necessarily the same. So worth diving into. Let me put my list here. Guenther, I don't want to massacre your last name. So would you help?
Of course, it's Dobrauz. Guenther Dobrauz. I'm a partner with PwC in Zurich, Switzerland, and I'm leading PwC Legal in Switzerland, which as such has been advising a number of the key players in Switzerland over the past years, be it on the banking side, but also obviously on the classical crypto side. And it's been fun. Right now, we're experiencing a bit of a crypto winter, but we're looking for new stuff to happen.
Actually, you know what? I'll start with you. And it's interesting what you're saying. I'm doing a fair amount of work in Switzerland, and it seems that things are reasonably hopping in Zug and elsewhere. Is that a false impression over here in Los Angeles, at a distance?
Well, I guess you're right. One of our reports. No, I mean, obviously still things are still alive, but they're definitely not where they used to be. Now there's a mixture of two things. On the one hand, companies have progressed, but obviously also funding is difficult right now because people can't really get out of Switzerland. And yes, a lot is going on decentralizedly, and most of that is kind of digital, but still you need to meet people. So I guess right now we are seeing a lot of the established players pushing stuff forward and just very few new guys coming to the table.
Got it. So, Interesting. All right, I look forward to escaping from COVID lockdown and being able to visit and verify all that. Joshua, give us your sort of U.S. Obviously, we're going to do this a little bit unstructured, and then we'll kind of dive into more specific questions. But you're head of a large practice group at a large firm, obviously focused very deeply on compliance. What are the trends you're seeing arising as we head into the end of 2020 and heading into 2021?
Wow, so trends, I mean, that's a big one.
Yes.
I think okay, by the way, nothing said on this panel is legal advice, investment advice, or on behalf of any of our clients or employers, unless somebody specifically says so. Right? So I think in terms of trends, I continue to see a number of projects and teams, both emerging companies and really large companies, moving forward with projects where they wish to enter the U.S. Right, many established players that have been successful outside of the U.S. trying to find a way in. So I think in terms of trends, at least for me personally, I see an increasing number of folks wanting to actually interact with FinHub and or other regulators, or at least think about, okay, what is my strategy here? So I see a lot of that. Certainly, I guess broader trends, well, with the enforcement actions, in the U.S. securities law space, that certainly is informing people and their next moves. Also, as I'm sure we'll touch on later, some of the proposals for new laws, including by FinCEN, lowering the potential threshold for money transmission and other sorts of.
Yeah, sorry, I got to break in. How do you feel about that, fellow American?
How do I feel about it? Well, okay. How do I feel about it? Well, I can look at it from many different ways. On one hand, I can say, well, there are some countries around the world that have a zero threshold, right? And moving from 3,000 to zero, like, FinCEN has proposed 250 as a threshold. So on one hand, I could say, well, it could have gone to zero, and they are saying that crimes are happening, like financial crime is happening at a lower dollar threshold. On the opposite side, I mean, to the extent that we really do want this to be something, mainstream and, tokens for use purposes and not just for investment or speculative purposes, I think it could become quite expensive for various players. And also, I mean, you look at some of the projects, including Libra, when it initially was released, and they said, hey, we're going to help bank the unbanked and things like that. Well, you know what, if every single transaction that you're using is going to need KYC AML, query whether the people who don't have government IDs, how will they do this? So I think there's a lot of things. The last thing I'll say on this point, because I could probably go on for a while, is that if you look at, I think it was the Digital Taxonomy Act that proposed a $600 de minimis threshold or thereabouts for transactions that would not, for tax purposes, would be considered de minimis. And so I would suggest that maybe those two things could be harmonized, the 600 or the 250 or something like that, if it were going to happen. But I think there are policy reasons either way. So.
Fair enough. So let me throw this to the group, and first one to answer gets to answer. In terms of the 5th AML money laundering directive or the new financial action task force guidance, and different, I guess, Asian implementations of versions of this that I'm not personally overly familiar with. What are you seeing is top of minds in your ecosystem or for your clients or the people that you're working with? And first one to answer wins. And if you don't answer, I'm going to pick on you. Guenther, fine, you win. I'm going to go back to you just as you're appearing first on my screen. You're in Switzerland. Are you living in an AML D5 world or FID world?
I believe so. I mean, obviously there's different opinion, and I will not get into that. But I believe so, yes. And also the established players, they are, they got their stuff going on now with AML. Either they do it themselves or they have specialized dealing with that. So I believe it's not a big thing for them. really it's a big thing for like the first guys who, you know, just think about where Bitcoin comes from, and right of the kind of meltdown, if you're almost meltdown of the financial system at the time, they really just wanted to get past it, and they ignored all of those ideas, not because they had to ignore them, but because they just disliked them. So I think for them it's a problem. For the people playing right now, I think it's kind of okay because it can be dealt with. For some of the newer kids that we're seeing entering the realm right now, it's a challenge. But it can be done. So I think the main reason or the main challenge we're seeing right now is people going after licenses and thinking about where to license what and how to structure their rollout globally.
Fair enough. And then, Brian, one thing you mentioned that you have a unique sort of Hong Kong perspective. And I guess there's new regulatory proposals. There's Intermast is one thing you mentioned, and the travel rule, which sort of play into this area. Can you talk about those a bit?
Sure. So to take a few steps back, you know, Hong Kong is kind of the top 3 IPO centers of the world, right? So for lots of different reasons, its regulators are very keen to keep that status. So there are various parties, of course, and as you all know, there's a big spectrum. There's a whole DeFi spectrum, and there's more instos, right? So a lot of the space that we see tend to be people who want to go into the insto space. So last year at FinTech Week, the SFC, who's a local securities regulator, allowed for an opt-in what they call virtual asset trading platform regime. So if you wanted to be in that space, you can go into that. Now, in the interim, as we all know, FATF has introduced their guidelines. And so for those that wanted to get into the insto space, there have been lots of different initiatives. So to comply with the infamous travel rule, I think there have been some really interesting kind of RegTech kind of solutions. So one relates to messaging standards. Right. So the same way that you have messaging standards that were the basis of Swift and the like, there's a group called Intervast, which is led by the Chamber of Digital Commerce, Global Digital Finance, and IDEXA, which is Singapore-based, are all kind of have agreed to this standard, right? So IVM 101 standard. So that's for messaging. Then the other thing that's been introduced is the travel rule initiative, where they have a TRP and API standard. So there are lots of different ways to try to address the FATF rules. At least in my space, the people I deal with are trying to do that because they're trying to get the insto money, right? And so there's that aspect. The most recent development in Hong Kong has been the rules around, last week it was just announced that they're now going to regulate crypto exchanges. So they're passing new regulations. Well, it's a consultation at this stage. So the idea now is, instead of just an opt-in, if you were trading any digital assets, you needed a license. So the industry is in a bit of a tiz now, right? So depending on what I like Guenther's analogy, right? So the old folk, the people who've been around for a while, they're like, well, hang on, right? And those that are favoring retail, because suddenly, you're only accredited investor land, right? And unless you go full-blown, prospectus land. So we'll be spending the next couple of months
or full-blown decentralized finance land, where you kind of are a pirate.
Exactly. And
but maybe a successful pirate.
well, what can I say? BitMEX was based in Hong Kong, right? So
I think that wasn't their only issue.
No. But my point about being that and they're now no longer in Hong Kong, right? Yeah. So at least physically, the individuals, because they're extradition, et cetera. So talking about pirates, so Hong Kong is keen to kind of legitimize, and there will be, of course, different people with different views along that space, and DeFi will be a challenge.
Interesting. And Michael, can you give us the sort of Chinese perspective on the compliance or regulatory waves you're seeing coming in?
Yeah, I mean,
or the China perspective, I should say.
Sure. I mean, I think from a Western perspective, it really looks like, if you look at a regulatory heat map, right, China always looks like really in the red, right? It kind of banned Bitcoin exchanges. It's like clamping down on mining. Binance gets kicked out. It doesn't look like China's really down with crypto, which is true. Okay, they're not into the sort of unregulated stuff, right? But I think having a sort of front row seat where we are, at the FinTech Research Center at Fundan here, we're working with a lot of the regulators. We're working with the local governments and things like that. And it's our perspective that China is basically cleaning house, right? They're cleaning up all the riffraff. They don't like the ICOs. They don't like the unregulated stuff and, you know, people being scammed, right? But that cleanup does not mean that they're against it. It means that they're just kind of getting rid of the unregulated stuff, and they're going to put in regulation pretty soon. So actually, I've been on the pulpit talking about this for quite a while, which is basically that, hey, watch out for China, because in the next you know, number of years, I think sooner rather than later, you know, China is going to regulate crypto assets or digital assets, and the regulated versions, you know, is really going to drive, you know, a catalyst movement across the world. The same way that the digital currency is doing, the digital RMB, the DCP, right? It's catalyzing, you know, the whole world to actually take a look at this. You know, I think the same, it's going to be the same, right? I mean, I think, you know, where Guenther is in Europe and Switzerland and in Singapore, certainly the first moving regulation as the front runners, but these are tiny economies, right? When China decides to regulate digital assets and they do the China thing, which is basically, you know, tell the whole country to move that way, it's going to make major waves. And I'm going to say that that's sooner rather than later. So,
by the way,
you know,
what a life that you can call Switzerland a small economy.
Yeah,
I want an economy the size of Switzerland, personally. But
sure. Well, I'm just saying that indigenous to the country, you know, there isn't as much, you know, activities, mostly abroad, right? So,
sure.
So I think, you know, where you have China being the #1 country in the world in terms of PPP, and then on top of that, they regulate digital assets. That's a different kind of ballgame, and I think that's going to happen sooner rather than later. Yeah.
Let me ask you a potentially provocative question, and if I'd like not to answer, no problem. With the aborted Ant IPO, does that have any impact on the digital or virtual asset space?
Are you asking me? I think
yes.
the Ant
I think I'm asking you, and I'm asking Brian.
Okay.
But you first.
Yeah. I think the Ant Financial, you know, abortion, as you call it, you know,
aborted. I wasn't being quite that harsh.
I mean, you have to look at it, right? I mean, I think the Chinese government actually has some very well-reasoned concerns, right? You know, they want to have a tightly regulated thing, and then basically, you know, you have Jack Ma at sort of the Bund Forum basically saying, hey, you know, we don't need to be regulated. We shouldn't be regulated. Yeah. And you know, there isn't an even playing field. The banks have to have capital reserve ratios, and you know, to loan to you know all that kind of stuff, much with greater constraint than what you know Ant Financial is dealing with. So I think that was had to be sort of you know adjusted, right? And the question is, does that happen before or after the IPO, right? I would argue that if that happened after the IPO, that would even be more of a problem, right? So I think
it may have been too late in some respects.
Yeah, absolutely. So you know, but to answer your question, right? I think that's a different set of issues than the actual digital asset regulation, which hasn't come out really, besides the digital currency versions, which you know the PBOC has you know sort of strongly hinted that policy will come out very soon, maybe you know by the end of this year, kind of thing. And certainly the commercial release of the digital currency will happen. They've already stated before the Olympics, right? So that sets a sort of like a timeline for when this is going to happen. This is going to be, as I like to say, sooner rather than later, right?
If it's before the end of the year, that's very soon. That's very interesting, actually. First time I've heard that. Brian, again, I'm gonna throw you a curveball, but with respect to Ant, any sort of Hong Kong perspective on it?
Sure. I'll just briefly add what Michael has said. So my background is an IPO lawyer. I took Ant Ali private, you know, in Hong Kong. And I helped set up Credit Suisse's joint venture in China to do Chinese, you know, IPOs and like. So I have some views on this, but I think for this audience, a couple of things. So one is understanding there's an intersection between the role of innovation and the whole role of government and regulation, right? So on the innovation stage, one thing that people used to say is, wow, how come China grew so quickly on the internet finance side? It's because, there was not a lot of regulation. That's why, that's why it could grow so quickly, and that's why it was so innovative. Some of us might argue also that, well, there was kind of a lacuna. There was not a lot of regulation. It grew fast, but it crashed fast too. So P2P is a great example. So P2P grew tremendously in China. And then I think the last number I saw is $150 billion lost, right?
Wow.
Because of Ponzi schemes. And people were embezzled and there were executions. They executed people for running those schemes. So now they've arguably, they've added a lot of regulation into the P2P space. And when you have somebody like Ant, who after the IPO would be the biggest IPO in history, coming out and saying, well, don't regulate us. Again, I think to Michael's point, I think it's the regulator saying, well, actually you're in online finance and online lending, and we need to regulate that. And so they did it for various reasons, and different people contributed before the IPO. So as a technical lawyer, you say, well, there's a material change in the regulation, so you need to reflect it in the prospectus, and they reflect it in the pricing of it, right? So in some ways, it's better to do it before than after. After the price goes up, you introduce regulation, people lose money, people are not happy. So might as well do it sooner rather than later. That's one way to think about it. The other way is actually a trend and a reminder to everyone. Ultimately, the regulators / government have a say in this matter. And if they believe strongly enough, they can and will step in.
Clearly, 2 days before. That was
3, but yeah.
3. Okay, thank you. Yes, 3. Ben, I want to bring you more into this conversation and kind of get the lovely Paris EU perspective on the waves of compliance you're seeing, and to the extent it's affecting your business and your customers.
Yeah, sure. Thanks. Well, I quite agree with what you said, guys, because I see an increasing number of crypto players coming to us actually as a crypto monitoring solution, because mainly they want to satisfy specific requirements to obtain a license, for instance. But this number is also increasing for traditional financial institutions. We've seen that especially in Switzerland, because the regulation in Switzerland is quite clear, it's quite reassuring for them. So in France, we have the AMF, and there are a lot of new players, French players coming to us. So they are mainly crypto trading platforms, wallets, payment processors, or ATMs. But like I said, we saw those changes also in Germany with the BaFin. So there are such private banks trying to support kind of cryptocurrencies, and they need to be reassured. So all this new regulation with the MiCA in Europe and in different countries in Europe, but also in the APAC regions, like recently in Hong Kong with a crypto trading platform. This is nice, and this is something that has been done and in Europe and in Switzerland already. So for the moment, the trend is evolving, and I think the changes is really nice, and it has to be done for the crypto market to be more transparent, more reassuring for all of the players. So yeah.
What's your take on decentralized finance? And there is clear, let me frame it this way. There clearly is a benefit in regulation in that it can establish market trust. It can let people know what they're supposed to do and what they're not supposed to do. And that kind of clarity allows things to move forward. There's also, I think, the issue that if you're only allowed to take action once a regulation is in place, it's not like regulators are the most creative people on the planet. Some things may not come to fruition that probably could come to fruition. So Ben, for you and your clients and for your business, what's your feeling and what are you seeing with decentralized finance? And then I'll throw this to other speakers.
Yeah, sure. Well, for decentralized finance, this is quite exciting also, because even if there is no clear vision to decentralized finance, clear rules, let's say for the moment, they can still become quite compliant with the tool we are providing also. So they are not putting aside, actually. They are actually thinking of a way of becoming compliant. So some of them are coming to us. They say...
sorry, let me pause you 1 second, then I'll let you continue. Yeah. What leaps to my mind as you're saying is, who's the they in decentralized finance? Isn't the point of decentralized finance that there's no they? Yeah. Like, how do you get yourself compliant? And how do you know that person represents the DeFi if it's really decentralized? And go ahead, please.
Yeah, sure. Maybe not in terms of KYC, because there is no KYC in terms of DEX platforms, for instance, but in terms of red flagging specific transactions or addresses and accepting or not, like we saw this in KuCoin Arc recently, that has been quite washed away in DEX platforms, for instance, where those kind of platforms can move forward and say, okay, we can still red flag specific addresses and transactions and try to become, even to be more transparent with that and become more trustful in terms of visibility as well. So
okay, so it's not necessarily the DeFi mechanism itself, but the players in the market accessing that mechanism can bring themselves into relative compliance. Or
yeah, exactly.
I'm hearing you. And Josh, I know you're neck deep in many topics, but what's your feelings, or where do you see DeFi going in terms of regulation and compliance, and does this topic even apply to this space?
So I think it absolutely applies to this space. I guess just stepping back slightly, sometimes, you know, I think many of us have heard the comparison of DeFi in 2020 to like ICOs in 2017, and people thinking, oh, it's something brand new, laws don't apply because this is so new. But I think, you know, one of the challenges, at least I won't speak of the rest of the world, but under US law, you know, is that a lot of these laws are principles based, and it doesn't matter what new buzzword you give it. It's still, you know, you still need to run the same assessments, the same, you know, qualitative, like what is happening here, assessments to see, for example, whether you're selling a security. You still have the Howey test. You don't get away from it just because you've called it DeFi. Or, for example, things like, you know, people may take some position or another about whether they need to do KYC AML if they set.
So I'm sorry, I'm going to do moderator privilege and just interrupt because you're saying something that's close and dear to my heart. Just take Howey for a second. With DeFi, is there a common enterprise? Can it ever be a security?
I mean, I think it depends on what way you look at the common enterprise.
Fair enough.
I mean, I think also like horizontally or vertically, right, depending on the circuit. But also, I mean, I think there is no monolithic DeFi, right? So, I mean, you may have some things where you say, oh, it's decentralized finance, but it looks more like either Delta, where Zachary Coburn is still, you know, taking orders and is not even on chain, right? Which, for those who are familiar with that enforcement action a couple of years back, you know, that's something to think about. But I think there's an interesting tension because, and I'll make it quick, but you know, on one hand, you might take a position about whether you think, or at least some projects I'm aware, take a position about whether they think they need to do KYC AML. If they've stepped away from the project, they have no MNPI, like material non-public information, etc. But then things like OFAC and sanctions, harder issue, right? Like hard to escape from. How do you do that? And so some projects geo-block, but we all know that's imperfect. But what I think is an interesting tension, though, is if you look at the securities laws and the framework that the SEC has put forth, saying, you know, part of what we look at is whether there's an active participant. You know, many of these projects are saying there's no active participant. We've like unleashed this on the world, right? And therefore we are not, you know, no one's relying on us anymore. But the question is, like, when you're setting it up, should you be programming in these things like to comply with sanctions and, you know, FinCEN guidance, as well as the rest of the world, right?
And can you? I mean, how do you oracle between a DeFi platform and the OFAC list?
I mean,
you and I will solve that, and then we'll retire, and then we'll sponsor more conferences.
It sounds like a plan, Gordon.
I like this, and let me throw this to Guenther. Just in terms, what are your thoughts and feelings on DeFi compliance, regulation, and what the appropriateness of that subject matter, the appropriateness of regulation in general to DeFi?
I'm not going to comment on the appropriateness of compliance, but I mean, obviously,
that's very political, my friend.
No, but I've always been very passionate about decentralization, and as such, obviously, the idea of DeFi is just stunning and great, and you got to support it. Truth is just, and you kind of hinted on that, and especially when you listen to what Josh has been saying, it somehow right now clashes with the reality of what we have, right? Always back and forth. As much decentralization as you may get, you are entering the classical realm. And again, once you're past that kind of early adopter stage, we just don't have a world that functions like that. So unless the rules are kind of changed, right, you will have to do this somehow. And as much as we like some of the players in Switzerland, right now, I just don't have the solution. So I'm very much looking forward to your solution. I will definitely adopt it once you have it, but right now it's just super, super difficult.
So are you going to support us as a customer or as an investor? You know, I'm taking notes.
Whichever.
Oh, okay, very good. And I'll throw this back to Brian and Michael. So DeFi specifically, what are your thoughts? And first one to jump in, just be brave.
I'll take a stab at that. I'm interested in marrying the sort of crazy world of like crypto, the digital asset innovation, but my focus is trying to bridge the gap between that innovation and sort of traditional finance, because we sit at a university and thinking about the applied research of exciting merging these two. So when we talk about decentralized finance, as you mentioned before, there isn't a they. It is decentralized. There isn't a lot of the KYC, all this kind of stuff. I'm very interested in the sort of hybrid version, right, where we can actually have the minimally viable structure and compliance and things like this, such that we can take this innovation, which is truly innovative, and everybody's seen the magic that's happened over the last 6 months. But I think also maybe a lot of people can see that it's probably not sustainable. It's not sustainable because it doesn't have the correct rules of engagement, and there's a lot of bad behavior, and things are there are a lot of people who can just scam and that kind of thing. If we can put like a framework around it, that innovation of being able to stake assets and provide liquidity and yield farm and things like that, I think could have legs in the traditional world. And so that bridge between the two, I think is fascinating, and I think will probably be the next phase of development. And I'm very interested in exploring that.
So let me be a little bit controversial. I was just on another panel, and the topic of discussion was, will traditional or even perhaps legacy type financial institutions try to squelch this? Will they try to adopt it, but kind of reform it in a way that makes sense in their world? Or are they going to be fundamentally changed by working with these mechanisms? I mean, even if something is labeled as a bank in 10 years, is it still going to be a bank in the way we understand the term? And Michael, I understand you're coming from a perspective of being in the university and working with these institutions. Is there anything to be just roll with that idea and tell me what your thoughts are?
Well, there's going to be massive disruption, right? The traditional financial ecosystem at whatever scale, international monetary system, traditional banking system, all is going to be disrupted, right? Because technology is moving so fast, and there's so many, I would say, compelling use cases that technology will find a way to be used, right? That being said, I have to maybe just speak about this in general, right? Like, when Satoshi came up with this sort of like, notion of decentralization and, trust lists and all this kind of stuff, it's such an innovative concept. So we went from this completely centralized world for, thousands of years, arguably, to this completely decentralized world, right? And arguably that decentralized world hasn't really panned out fully, right? I would argue that full decentralization is almost akin to like communism, right? It's kind of like
okay, now let me jump in and then I'll let you continue. But just keep in mind the timelines you're talking about. You just stated that centralization was the way for thousands of years, and it's been just over 12 years since this paper came out. Might someone just say, maybe give them like a couple of centuries just to like even up the scores a little bit?
Fair enough. Okay, so centralization has been around since civilization's been around, and now we have technology that will allow full decentralization. But full decentralization, I think I would argue, does not have enough rules of proper behavior to be able to actually do things in a practical way, right? I mean, it hasn't really fully panned out. My argument is the middle way, right? There's some balance between centralization and decentralization. I call it sort of minimally viable structure, right? Minimally viable, rules of engagement so that good behavior can occur, right? And so I think that's really where we bounce this way, and now we're going to bounce back. I do believe that somewhere in the middle we'll have a way where we can actually merge these things, right? Because short of that, I mean, what the decentralization movement, you know, if you're a full Bitcoin maximalist, you're like, we don't need central governments. We don't need any financial institutions. We're going to have this utopia world where everybody's just going to be fully trustless and everybody's going to get along. I would say probably there's a more of a hybrid solution where we can get both sides to meet in the middle.
Fair enough.
Can I jump in for a second on that?
Sure, Josh, go please.
So I agree with Michael, and maybe this is a bit of a controversial reason, hopefully not too controversial, but I mean, look at us, like we're on a panel, we're talking about regulation and technology and finance, right? At a very high level, right? And so it's very, like when we think of this utopian, as Michael put it, existence of we're all going to do this for ourselves and we all get it, we all understand it. I mean, this is a very small sphere if you're thinking about the universe of people who understands the laws, the finance, and the technology versus the whole world. So to the extent that something is going to become mainstream, I mean, I think certain protections have to be built in, right? And certain groups and individuals within and across groups are going to want a bit more hand-holding, perhaps. Yeah, so I do think that banks will continue to exist and financial institutions will continue to exist. Of course, as we see with the pandemic and everything else, there's a lot of competition and pressure for them to provide different services and, you know, virtual services and everything else. But I think no matter what, we, in my view, probably should build in some safeguards, you know, and some on-ramps for folks who may not be conversant in some of the ins and outs of the technology law and the finance.
Fair enough. You know, it's funny, just earlier, I was on a decentralized panel and there was some decentralization maximalists in there. And I was channeling what I considered possible counter arguments, like how does decentralization build an airport? You know, it's one thing to build an ecosystem or platform or something that's open source or something that's purely digital, but when you have real world physical systems that have potentially catastrophic externalities, like a nuclear power plant or an army or pollution or, you know, illegal pornography, I'm just throwing stuff, you know, where the participants aren't just voting to participate or not, or voting with their wallets, but it has a splash effect on people around them. Those people didn't get to vote and didn't have control of it, you know, and you know, I think the general consensus is that the Great Depression was caused by the stock market crash, and the Great Depression, the stock market crash led to World War II, which led to all kinds of horrible things. And you didn't have to be an investor in the stock market to be affected by the Great Depression and have your son drafted or you know, go fight in the war and die. So you know, you need some level of control. The arguments that I heard raised against that was, you know, look at, you know, the greatest massacres in human histories. They were done by governments. You know, you can look at Stalin or you can look at Hitler. So I always feel that sort of tension. One of the counter arguments that was raised is we want to sort of keep on increasing the nexus of what can be decentralized, but there's always going to be an outer sort of user interface wrapper around it to provide people comfort and accessibility. So Josh, I think you're kind of getting that a little bit. Like I don't want someone with diminished capacity or who's 80 years old, though I know a lot of sharp 80-year-olds, to have to figure out how to use a freaking wallet. You know, someone does need to hold their hand. Now, I guess the question is that going to be enforced through regulation, or is that simply going to be a market effect? And I'll throw that to you first, and then if anyone else wants to comment.
You're throwing that to me? I think it'll be both, because I think it's not just the ability to create a wallet, but I mean somehow the ability to comprehend a risk. Right. So there's two things. There's the one part that industry can solve for, like how do you actually like operationally do this? And then another part that really is regulations. I mean, one of the twin aims, say, of the SEC, right? Not just is foster innovation, but also protect those that, you know, need some protection. So even though I am so pro, obviously, digital assets and decentralized finance and everything else, obviously, it just does occur to me, you know, there are some people who don't know how to balance their checkbook. You know, there are some people who don't know how to, you know, do a variety of things, yet they might be able to log on and might not appreciate the risk. And I just think we have to be cognizant of that. even though it's not always the most fun thing from a business planning or income perspective.
Fair enough. And Ben, what's your, just on a broad philosophical level, and I think you, again, maybe bring your company into this, is regulation appropriate generally, or can we sort of market solve for some of these issues?
Well, if I understand well, I mean, I think that I agree with you guys in terms of an hybrid model, that it will give an adaptation from the traditional financial world and the crypto world as we have seen. You know, we have been established in 2015, so 5 years ago, people were coming to us and didn't even know what Bitcoin was, you know. So in 5 years, we did a lot of way to become and to come to the regulation. So regulation is really important. So now we hear about CBDC, we hear about DeFi, and this adaptation to help to connect both worlds will be needed. So I think it will be natural, actually. It will be not the market or the regulation, it will come together. We are following the market, you know, it's growing, and regulation is adapting crypto world to the traditional way, so let's say. So this is definitely an exciting and needed time for the crypto worlds right now.
Interesting. Now, I guess, you know, we're coming down on the end of the session, but does anyone see a truly global regulatory regime arising in response to crypto and blockchain and these assets, because they seem to be inherently global, or they're just like the internet is inherently global, or is that just a pipe dream? And I'll throw that to Brian.
Oh, just the easy question. So I had a
you know what? I know you're a deep thinker. I'm just meeting you, but I read your CV and you're a sharp guy. So I threw it to one. I knew you could handle it.
So a few thoughts came to mind. So the first one, pulled together a few strands. So one, you asked whether banks themselves will perhaps adapt to some of these technologies. I mean, the same way now, a lot of banks have got blockchain departments, right? So yes, they will, but what I'm constantly reminded is that they're still all regulated. So they still have to work within the regime. So that's one aspect. The other area that I do work in is on AI, right? So in fact, the discussions you have on DeFi reminds me of that, because you're talking about automation, right? You're trying to put the automation together. So the AI governance aspects, I don't like the word ethics, but you know, the governance aspects of how we deal with that on a global basis, right? Perhaps there's some insights from that. It's not an easy, you know, it's a wicked problem, right? But once you create the AI that's out in the world, how do you stop it, right? So there's some lessons around that, and people are looking at how to regulate it / self-regulate through governance mechanisms / ethics, and you know, that's a much broader topic. So the last point I thought I wanted to throw out there was the assumption almost that if it's decentralized, that, you know, everybody, again, we empower the individual, and we all love that. And I think, but what Josh was saying, and again, perhaps there's some of us lawyers coming from that background, you know, a lot of laws came to existence as a kind of consumer protection. So DeFi and a lot of those approaches almost assume that you don't need consumer protection. You can look after yourself. Thank you very much. Right. So, but I think most societies believe that we should have some degree of consumer protection. We might disagree about the extent. The part that I wanted to throw out there, which potentially is kind of controversial, is, you know, with the recent US elections, right? Assuming that's over, but maybe not.
That's a big assumption.
Exactly. So how many, you know, people were saying this? I believe the stats are such that it's the largest number of votes in history, right? And other countries were like, but how many people voted again? So you have the largest democracy that has all the rights to vote, and you don't exercise it. So what happens in DeFi when all these people have these rights, but they don't know how to use it or they don't exercise it? And you have the whales come in and whale in, right? So that runs the market. So so let me just throw that out there for consideration.
No, the beautiful points. But let me also point that I think you cleverly evaded my vague, overarching, crazy question, which is, do you see this driving towards a global regulatory regime just because it has to, or is that a pipe dream?
Okay, so we tried globally to create this thing called the League of Nations, didn't kind of work. We tried this thing called the UN, didn't kind of work. still trying, we're trying, but it's not easy, right? As global powers change and shift. For example, I'm involved in an initiative called the Asian Dialogue for AI Governance. And why we feel that's important is because a lot of the narrative on AI is American or European. We need an Asian. How can you talk about AI without China? Right? One of the biggest, forces of AI research and implementation.
I just read an article yesterday that China's clearly moved ahead of the US now when it comes to AI.
Well, so largest number of patents, largest number of AI patents, right? And blockchain patents. Thank you very much. So if for us to develop something, it needs enough meeting of the minds. So that's why some of these FATF kind of approaches are quite interesting. They're really going down to technical requirements, right? So they're trying to go down to the ISO, the IEEE type. Look, let's let the highfalutin politicians argue, let the technicians agree on the technical standards so that we can talk to each other, right? And then you build from that in terms of different protocols. So now, with the IVM 101 standard, the theory is that if you agree on the data standards, then how now how the different protocols can talk to each other. There will be lots of different protocols that will arise, and that'll be, Sony versus Betamax versus, right? And let the protocol wars begin, right? But the whole point is we need to find enough commonality. Now, the thing with the DeFi, I think, will.
And Brian, I'm sorry, I'm getting chatted that I think we're almost out of time. So I'm gonna give you 30 seconds to do the punchline.
Sure. So the punchline is this. The DeFi world starts with a libertarian perspective, where they don't like the governments in. If anything, coming back to your earlier point, governments do have a lot of power and they can stop stuff. So right, no matter where you are, what you do. So they will find a way. The best way is to how can we make it a more efficient manner so that our world can be better, generally speaking.
Fair enough. All right, I would like very much to thank our esteemed panel. It was very interesting. I like this global perspective. I like that we had a wide-ranging kind of philosophical discussion. So thank you all very much for your insight and your time. Thank you to Hong Kong Blockchain Week. This is fantastic. So I wish you all well. Stay safe. Hope to see you all very soon again. Thanks.
Yeah.
Thank you.
Thanks, Gordon. Thanks, everyone.